Welcome back to the Dividend Diplomats YouTube channel. You know you got your two favorite dividend investors, Bertha, Hurt, and Lanny, the DD guys. And we're going to showcase two more dividend stocks here on this channel in the same industry to see which one is a better dividend stock to buy for your portfolio.
Oh, baby. But before we start, everybody, please subscribe down below to that channel. Give this video a thumbs up. Lanny, you know what's making a return here?
What's making
Look,
a return?
look what I found in my cabinet.
Oh, let's go,
Oh,
guys. Let's
it's
give
been
the
a
people
while
what they
since
want.
you've used it. It's been a while since I busted out the Dividend Diplomats coffee mug. Everybody, hit that store below. If you are looking for a coffee mug here, like looks like ours, great. We love them. But all right, enough promotion here. So let's jump in, Lanny. Let's talk through these two companies. And correct me if I'm wrong here. These aren't low yielding stocks, are they? They're pretty high dividend yielders.
Now, these are two dividend yielding stocks that are well over 5%. In fact, one's over 5.5. The other one is almost at 5.5% dividend yield. What that means is for every $100, you'll get $5.5 on your investments over the course of the year, obviously quarterly. But again, wanted to really showcase two high yielding, high flying, wheeling dealing, girlfriend stealing, woo, Ric Flair right here coming at you.
So what's cool too is we've talked about one of these stocks uh, frequently on this channel, once every few months or so, based on the metrics. What's going to be cool about this video, though, is every time in the comment section, everybody says, well, what about this stock? So you know what? Rather than feature one, we're just going to feature them both, and we're going to run them head to head, talking about their metrics and their balance sheet. And we're going to look at their metrics using the Dividend Diplomats Dividend Stock Screener. Three simple metrics that we use to review every single stock. Price to earnings ratio less than the S&P 500 in competition. Two, payout ratio less than 60%, although we think that perfect payout ratio is between 40 and 60%. Three, we look at that dividend growth history. We look at the 5-year average dividend growth rate and how long a company has increased that dividend. And then lastly, it's not an official metric, but it pretty much should be. We like to call it that bonus metric, that dividend yield, because we always look at the first three metrics first to make sure we are getting a quality dividend before we look at how high of a dividend we are getting.
You got that right, brother. And again, on this journey to financial freedom, we like to buy dividend stocks to build that dividend income because we believe it's the not the second best, not the third best, but the best source of passive income, guys, because you can earn money while you sleep, let it reinvest, grow your income, and get that dividend growth added in, hopefully. So, Bert, we got two dividend stocks here in the chemical industry. Two are, pretty massive, very well-known names. Obviously, like you said, we've showcased this one. This one's the icon of the YouTube channel almost at this point because of how many times they've showcased the headlines. Lyondell Basel, market cap at about 30 billion. And then we have to bring in Dow Inc. That's their official name now at 37 billion in market cap. So technically Dow is bigger than Lyondell Basel, but these are two great dividend stocks,
Yeah,
right?
and Dow was even bigger before they did their split up. They had the Dow DuPont merger, so they were Dow DuPont for a while. And then they split them up into three separate companies. So if you held Dow several years ago, you now have Dow DuPont. And then I forgot the name of the third. I can never remember the third one.
Corteva.
Yes, yeah, thank you, Corteva. But it doesn't. You have three, but to your point, now we're focused on the slimmed down, directly comparable version to Lyondell Basel, which is nice to see that their market caps are in line. We're not dealing with two different size companies.
Yeah, and we're filming this, guys, on August 6th. So, we're using the stock prices as of the market close on August 5th. And, two pretty kind of funny stocks in my eyes, Bert.
Yeah,
You own both of them as well, right?
I still have not bought Lyondell Basel. I have never bought them, but I own Dow.
You own Dow. You are the Dow, the Dow, the Dow.
Yeah, that's right. So yeah, they are funny because I mean they're in a sector where you want to be one of the larger companies. They're pretty high barrier cost entry to be massive chemical companies and massive suppliers to large corporations. Like you're not flip-flopping. Once you pick one of these, you build them into your process. It's not exactly a easy thing to switch. So I think that's the fascinating thing about these two companies.
Exactly. And both stocks are actually beating the market this year. Dow is down about
Oh,
9.5% this year, and Lionel Basel is down about 8. versus the S&P 500, which is down, I don't know, what is it, about 16% or 14% this year over?
Yeah, so they're just not doing as crappy as the S&P 500 is really what this boils down to.
Exactly. But all right, let's dive
Yeah.
in, bro. Let's dive into LyondellBasell. Again,
Yep.
one of the largest, chemical companies in the world. Ticker symbol is LYB, and they were recently trading at $85.61. I own probably almost $10,000 worth of LyondellBasell in my dividend stock portfolio. Link is below in the description if you want to see full transparency for free what is in the Diplomat's portfolios, both Bert and my stock portfolios. Analysts are actually still expecting the $16.57 in earnings per share. I even hate talking about it because it's like you already know the PE ratio, the first metric, is absurdly low.
Yeah, it's crazy how low the PE ratio is. But let's do the math here. When you look at it, their PE ratio is 5.17. And you know what's crazy about this PE ratio, Lanny?
So
How many times do you see it where a company's PE ratio is less than their dividend yield?
that is very hard to do.
Yeah, yeah, it's not an easy feat. AT&T is pushing the boundaries on that for a different reason, not because of just how poorly they've been performing lately. But it's crazy that LYB is a low PE ratio company that's just fallen so much, and their earnings are growing at such a high clip that their PE ratio is less than their dividend yield.
Yep. Now let's slide into that dividend payout ratio, that second metric. So they pay a nice fat, $1.19 per share per quarter, or $4.76 per share per year. Taking that over the $16.57 of expected earnings, your payout ratio is 28.73%. So way below even the 40 to 60% perfect range. I can't really say much more about that.
Yeah, let's move into that third metric here, the dividend history. 5-year dividend growth rate, 7%. They've increased that dividend for 8+ consecutive years. So there's plenty of room to keep increasing that dividend with that 28% payout ratio. And what else is there, Lenny? There's plenty of room to also do something else with that dividend that they just happened to do several months ago.
Well, they also sent on a nice fat special dividend. I think it was like $5.20 per share.
Mhm.
So, they do have a little fun with paying their shareholders.
Yeah.
So yeah, they sent out a fat dividend, which was more than their total annual dividend.
Yeah, remember, their annual dividend is $4.76. This year, they just doubled it up and said, we're going to pay you a $5.20 special dividend. That's what happens when your earnings can grow at such a high clip. And that's what happens when you have a low payout ratio. You have flexibility to announce strong dividend increases or massive special dividends.
And on top of that, the dividend yield, as Bert alluded to earlier, is 5.56%. So above that current price to earnings ratio. In summary, low PE at 5, payout ratio below 29%, dividend growth rate of 7% for 8+ years with a high yielding, high profile, and dividend yield of 5.56%.
All right, so Hulk Hogan has entered the ring now. His music's come on. He's in the ring, but the lights shut down. What's that? You hear Macho Man's music coming in here? We're going to have. Yeah, when we get to 20,000 subscribers, we're definitely going to have to bring Hogan and Macho Man back to our channel.
Well, let me tell you something, brother. You're going to step into my squared circle, the Dow, ticker symbol DOW, Jack.
That's right. We're going to get a Slim Jim here, Hogan. We're going to come right into the ring, brother. All right, we're going to have Dow Chemical in there. That's about all I've got in my system today for a Macho Man impersonation. A little stuffy here, so that doesn't make it easy. Dow Chemical, let's go through the metrics. Let's jump right into that PE ratio. They're closing at 51.49. Earnings per share, 7.95. That PE ratio is 6.48.
Wow. So another low price to earnings. 6.48, slightly higher than Lyondell's at 5.17. Let's see what the Dow currently does in the dividend payout ratio from that second metric. They pay 70 cents per share per quarter, multiplying that out by the 4 quarters in a given year. That's $2 and 80 cents out to each shareholder for each share. Payout ratio is pretty low when you take that over the $7.95 payout ratio. That's a 35.22%, slightly higher than Lyondell Basel's 28.73%.
But still better. It's still fantastic. There's still plenty of room for Dow to grow that dividend. That's the nice thing, especially coming out of the spinoff, because their dividend growth history moving into that third metric just hasn't been there. They worked through that big merger. They took on some debt. But they're working through setting up the dividend history. I think the spinoff happened last year, Lanny, so they're setting time. They're doing it. It's been stagnant, though, so let's not pretend like Dow's had some massive dividend increase streak before. They had been flat for a long time. When you go into Seeking Alpha, you look at it, they've paid 70 cents per quarter since 2019, so it's not as if it's grown. So we'll see what happens with the company now that they've slimmed down and spun off.
We need to see that dividend growth, guys, on Dow.
Point blank. There's nothing more to say than that. They need to start increasing it.
Yeah. So, but that dividend yield, Bert, I know on the flip side, you're kind of getting paid to wait for that increase, maybe. What's that dividend yield look like?
5.44%. So you're right. A significant premium to the S&P 500 and that high yield savings account. So you're not wrong there. But when you look at a place like Lyondell Basel that's paying you to wait and growing your dividend, it's hard to pick one versus the other.
Plus a special dividend. Ooh, Lionel, what?
Yeah. So let's go through. I'll summarize Dow quickly here. PE 6.48, payout 35.22, no dividend growth history, and a yield of 5.44%. I think you are about to hit a very good point right on the head, Lanny, when comparing the screener metrics side by side about the two of them.
Yeah. I mean, obviously, Lyondell does win on all metrics, actually across the board. But you mentioned actually debt, Bert. So let's touch on some of the debt levels that both have. I know Lyondell Basel, they have about $11 billion of long-term debt on their balance sheet, down by about 200 million from the end of 2021 to June 30th. So they're down. They're improving that balance sheet a little bit on the long-term debt side. What is Dow doing after you mentioned that?
$13 billion of debt, down 1.2 billion from year end. So they're paying down the debt. They're delevering. So that's what you want to see, right? You see a company that had a lot of debt before, they're paying it down, free up some of that free cash flow, sprinkle some of it over to some of the shareholders via dividend. I think that's might be in the future here. But okay, that's the long-term section of the balance sheet. Let's move it to the short-term focus, and let's take a look at the current and the quick ratios here for Lyondell Basel and Dow. You want to kick this part off, Lanny? What's their current and quick?
Would love to. So the current ratio, which is current assets over current liabilities, and the quick ratio, which is current assets minus inventory over current liabilities. So you want over 1 on current ratio, and you really want it to be close to 1 on the quick ratio, typically between well over 0.5, but you want that 0.75 to 1 usually, or higher, obviously. Current ratio for Lyondell Basel is 1.67 times, which means they can almost pay their current obligations 2 times over. Backing out that inventory for the quick ratio, it's still over 1 at 1.01. Solid.
Dow 1.65 current ratio, 1.03 quick ratio. So you look at it, they're about the same. The industry, both are in line with the industry there. Both are exactly in the metric spot that you talked about. The current ratio is well above 1. Quick above 1, which is what you said we wanted to see. A little bit below is okay, but hey, they're both above 1. So pretty comparable from a balance sheet perspective. Dow has more debt. They're paying it down more aggressively, though, so you'll probably see them working towards a Lyondell Basel debt amount soon, but it's moving in the right direction. So balance sheet wise, I'd say they're pretty even here.
Yeah. So Bert, what's your take right now? Which one out of the two chemical dividend yielding stocks here do you like?
I love Macho Man, but in this one, Hulk Hogan's coming out on top. I mean, it's the dividend growth history for Lyondell Basel compared to Dow. It's not even close, especially since the other metrics are so comparable too. The one big difference between the two of them is that dividend growth history, and it's just not there for Dow. There's no way you can look at the two of them in that third metric of our screener and say Dow comes out on top.
Yeah, I agree. In fact, I might add a little bit more to Lionel Basel at the 85 at the current dollar amount. If you don't own and you've been wanting to get into the industry, it's not a bad price to get in.
Nope.
Obviously, do your own research, make your own recommendations. Bert, are you making any dividend stock moves here?
We'll see if this is the time for me to invest and start that Landell Basel position. We'll find out. Keep an eye on the dividend dates, everybody. They'll declare a dividend here towards the end of the month with a pretty fast turnaround on the next dividend date. Last year it was done on August 20th, and the ex-dividend date was August 27th. So they haven't announced it yet. Not expecting anything crazy. They already announced their increase, but just keep that in mind. If you're trying to capture the dividend by purchasing LYB after doing your own research, you have a few weeks.
Guys, let us know what you're doing on these two big dividend stocks. Are you currently buying and scooping up more Lyondell Basel, ticker symbol LYB? What other stocks are you buying while the stock market is rising? If you haven't already, definitely give this video a thumbs up. Subscribe to the channel. Bert, any other parting words, my man?
Let's keep going, everybody. Let's just end it there. Let's keep going, buying those stocks, growing our income. That's what it's all about.
That was Bert the Heart and Lanny from the Dividend Diplomats over and out.